Welcome back to the channel, where we break down the latest and most exciting developments in the crypto world. If you're new here, don't forget to hit that subscribe button so you never miss an update. Today, we're diving deep into the world of Pi Network and its highly anticipated potential listing on Binance, which is definitely one of the biggest and most influential cryptocurrency exchanges out there. Binance is known for its massive trading volumes, global reach, and the ability to make or break new crypto projects. So, the possibility of Pi Network joining its ranks is creating a lot of buzz. Pi Network has really taken the crypto space by storm over the past few years. It's built up a massive, passionate user base, millions of people from all over the world, who are actively mining Pi coins right from their mobile phones. This unique approach has made crypto mining accessible to everyday people, not just tech experts or those with expensive hardware. So the big question on everyone's mind is, will Pi Network actually get listed on Binance? And if it does, what could that mean for the future of this ambitious project and its global community? There's a lot of speculation, but also a lot of hope riding on this potential milestone. The prospect of a Binance listing has sent ripples of excitement throughout the Pi community. Social media is buzzing, online forums are lighting up, and users are already imagining what it would be like to finally see Pi coins traded on a major exchange. For many, this feels like the moment they've been waiting for since they started mining. Why is this such a big deal? Well, getting listed on a major exchange like Binance would be a total game changer for Pi Network. It's not just about prestige, it's about opening the doors to a much wider audience and giving Pi real-world value in the eyes of investors and traders. It would mean increased visibility, greater credibility, and most importantly, liquidity. Liquidity is what allows users to actually buy, sell, and trade their coins easily, which is essential for any cryptocurrency to thrive in the long run. It could also attract new partnerships and more development within the Pi ecosystem. Just imagine millions of Pi users finally being able to trade their mined coins on a global platform. That's the dream, right? It could turn Pi from a fun experiment into a real player in the crypto market, giving users a chance to see the value of their efforts and maybe even profit from their early involvement. But hold your horses, because the road to Binance is paved with challenges and uncertainties. There are still a lot of hurdles to clear before Pi Network can make this leap, and not everything is as simple as it might seem on the surface. Pi Network is still a relatively young project, and it really needs to tick all the right boxes before it can even dream of joining the big leagues. That means proving its technology, building trust, and showing that it can handle the demands of a major exchange listing. We're talking about security, regulatory compliance, and of course a robust and thriving ecosystem. Binance has strict requirements, and only projects that meet high standards get the green light. Pi Network will need to demonstrate that it's ready for prime time. So, buckle up as we break down the latest updates, analyze the potential, and explore the challenges that lie ahead for Pi Network on its quest for Binance recognition. We'll look at what's happening behind the scenes, what the experts are saying, and what it could all mean for you as a Pi user or crypto enthusiast. This is going to be interesting, so stay tuned and let's see where this journey takes us. One of the most significant milestones on Pi Network's roadmap is the migration to its own mainnet. This isn't just a technical upgrade, it's a defining moment that signals Pi Network's evolution from a promising idea into a fully fledged, independent blockchain. For years, Pi Network has been building its community and refining its technology, and now, with the mainnet launch, it's stepping into the spotlight of the crypto world. This transition marks a crucial step towards decentralization and independence, which is absolutely essential for any cryptocurrency that wants to be taken seriously. By moving to its own mainnet, Pi Network is no longer reliant on external blockchains or test environments. It's now operating on its own infrastructure, which means greater control, more security, and the ability to innovate at its own pace. The journey to mainnet has been filled with anticipation and excitement as the community watched each milestone unfold. This leap forward is not just about technology, it's about empowering millions of users to participate in a new kind of digital economy. Think of it like this: moving from your parents' basement to your own apartment. You're finally in charge. You get to make your own decisions, set your own rules, and take responsibility for your future. That's exactly what Pi Network is doing by launching its mainnet. It's taking ownership of its destiny. And wow, the numbers are impressive. Over 12 million users have already made the leap to the Pi Network mainnet. That's right, 12 million. This is a massive achievement, showing just how much trust and enthusiasm the community has for the project. This massive migration is a real testament to the project's growing community and their belief in its long-term vision. It's not just about numbers. It's about people from all over the world coming together, united by a shared belief in the potential of decentralized technology. The global reach of Pi Network is truly remarkable. From students and entrepreneurs to tech enthusiasts and everyday users, people everywhere are joining the movement, eager to be part of something bigger than themselves. It's kind of like a digital gold rush, with millions of users eager to stake their claim in the Pi Network ecosystem. Everyone wants to be an early adopter, hoping to benefit from the network's growth and future opportunities. But this migration isn't just about the numbers, it's about fairness and security. The team behind Pi Network knows that for a cryptocurrency to succeed, it must be built on trust and transparency. Pi Network has implemented a pretty rigorous verification process to make sure that only legitimate users who have actually contributed to the network's growth are rewarded with Pi coins. This means that every user who migrates to the mainnet has been carefully vetted, ensuring that the ecosystem remains healthy and free from abuse. That means cracking down on fake accounts and bots, and creating a level playing field for everyone. By prioritizing real users and genuine contributions, Pi Network is setting a new standard for fairness in the crypto space. The mainnet migration is a complex process, but honestly, it's a necessary one. It involves moving massive amounts of data, verifying millions of users, and ensuring that everything runs smoothly and securely. It's like building a solid foundation for a skyscraper. You need to get it right from the start. If the foundation is strong, the entire structure can rise higher and withstand the test of time. And that's exactly what Pi Network is doing, laying the groundwork for a sustainable and trustworthy, decentralized future. With a strong mainnet, a passionate community, and a commitment to fairness, Pi Network is poised to become a major player in the world of digital currency. Now let's talk about the nitty-gritty of Pi Network, its tokenomics. This is where things get really interesting because understanding tokenomics is key to grasping how any cryptocurrency works and why it might have value in the first place. In simple terms, tokenomics refers to the economic model of a cryptocurrency, including its total supply, distribution, and how it's actually used within the ecosystem. It's like the blueprint that shapes how the currency flows, who gets rewarded, and what drives its demand. Think of it as the DNA of a cryptocurrency, determining its value and potential for growth. Just like a company's business model can make or break its success, tokenomics can make a huge difference in whether a crypto project thrives or fizzles out. Pi Network has a fixed total supply of 100 billion Pi coins. That's a lot of Pi. But having a large supply isn't unusual in the crypto world. It's all about how those coins are managed and distributed. But don't worry, it's not just going to be airdropped to a select few. The distribution of Pi coins is designed to reward early adopters and active contributors to the network. This means that the people who help build and secure the network from the very beginning are recognized for their efforts. Here's the breakdown. A whopping 65% of the total supply is allocated for mining rewards. This is a huge chunk, and it's meant to encourage as many people as possible to participate in the network's growth. That means you, the everyday user, have the opportunity to earn Pi coins just by participating in the network. Mining Pi doesn't require expensive hardware or massive amounts of electricity, just your smartphone and a bit of your time each day. Another 20% is reserved for the core team, the brains behind the operation, who are working tirelessly to bring Pi Network's vision to life. This allocation ensures that the developers and leaders have the resources and motivation to keep improving the platform, rolling out new features, and maintaining security. The remaining 15% is divided between the Pi Network Foundation, that's 10%, and liquidity pools, which get 5%, ensuring the smooth functioning and stability of the ecosystem. The Foundation's share supports community initiatives, research, and long-term development, while the liquidity pool helps facilitate trading and keeps the market healthy. This distribution model aims to create a fair and decentralized system where everyone has the opportunity to benefit from Pi Network's growth. By spreading out the rewards and responsibilities, Pi Network hopes to avoid the pitfalls of centralization that have plagued other projects. So, what does this all mean? Well, Pi Network's tokenomics are designed to incentivize long-term participation and growth. The more you contribute, the more you stand to gain, not just in coins but in helping shape the future of the network. The more people mine, use, and believe in Pi, the stronger the network becomes, potentially increasing its value over time. Ultimately, Pi Network's tokenomics are about building a community-driven ecosystem where everyone has a stake in its success, and where the value of Pi is tied directly to the collective efforts of its users. Now, let's address the elephant in the room, the Binance listing. As you can imagine, getting listed on a platform as prestigious as Binance is no walk in the park. Binance has a rigorous vetting process, and they don't just list any cryptocurrency that comes knocking on their door. They need to see real potential, a strong community, and a solid track record. And what better way to gauge community sentiment than through a good old-fashioned poll? Back in February 2025, Binance decided to do just that, asking its massive user base whether they'd be interested in seeing Pi Network listed on the exchange. The response? Overwhelmingly positive. Out of nearly 295,000 participants, a staggering 86% voted in favor of listing Pi Network on Binance. That's a clear indication that the demand is there, and the Pi community is eager to see their beloved coin on a global stage. It's like a giant digital petition, showing Binance that the people have spoken. This poll sent shockwaves through the crypto community, with many interpreting it as a sign that a Binance listing was imminent. However, it's important to remember that a poll is just a poll. It's not a guarantee of a listing, but it's definitely a step in the right direction. Despite the overwhelming community support and the positive sentiment surrounding Pi Network, Binance has yet to officially list the coin on its platform, and this has left many people wondering, what's the holdup? Binance is known for its cautious approach when it comes to listing new cryptocurrencies. They have a responsibility to their users to ensure that any asset listed on their platform meets their strict criteria for security, liquidity, and regulatory compliance. It's like a bouncer at an exclusive club, only the best of the best get in. While Pi Network has made significant progress with its mainnet migration and boasts a massive and passionate community, it's likely that Binance is still conducting its due diligence, carefully evaluating the project from all angles. They're probably looking at things like the security of Pi Network's blockchain, the token's distribution, and its overall compliance with regulations in various jurisdictions. This delay doesn't necessarily mean that a Binance listing is out of the question. It just means that Pi Network still has some work to do to convince Binance that it's ready for the big leagues. It's like a student studying for a final exam. They need to put in the time and effort to prove they've got what it takes to succeed.